In today's video, we will talk about two stocks that I think have huge potential in the future, Mullen Automotive and Palantir Technologies. These two companies operate in different but exciting markets, electric vehicles and data analytics. I will show you how they performed recently, their strengths and weaknesses, and how you can hedge your bets and diversify your portfolio by investing in both. So if you're interested in learning more about these two stocks and how to make money from them, stay tuned and watch this video until the end. Mullen Automotive is an electric vehicle company that designs, manufactures, and sells EVs. It also offers commercial vehicles, such as vans and trucks, for various applications. According to Allied Market Research, Mullen Automotive operates in the fast-growing EV market, expected to reach $803 billion by 2027. Palantir Technologies is a data analytics company that provides software solutions for various industries and sectors, such as defense, intelligence, healthcare, energy, finance, etc. Palantir Technologies leverages artificial intelligence (AI) to help its customers make sense of large amounts of data and enable informed decision-making. According to Grand View Research, Palantir Technologies operates in the booming AI market, projected to reach $733 billion by 2027. We are interested in these two stocks because they have strong growth potential and competitive advantages in their respective markets. I am willing to take risks for higher returns. I want to hedge bets and diversify my portfolio to reduce exposure to volatility and uncertainty. I will share a hedging strategy involving buying Mullen Automotive and Palantir Technologies stocks or ETFs. But before I do that, let's look at each stock and see how they performed recently. As you can see, Mullen stock has been trading in a narrow range between 68 cents and 79 cents in the past few days. The stock is down by about 90% year-to-date and has been under pressure from several factors. One main factor influencing the stock price was the news that Mullen Automotive received $20 million from Aquitas Capital on June 1st. This was part of a $65 million securities purchase agreement that Mullen Automotive signed with Aquitas Capital in April. While this cash infusion was meant to help Mullen Automotive fund its operations and growth plans, it also came with a cost. In exchange for the $20 million, Mullen Automotive had to issue Aquitas Capital with 19.43 million shares of common stock and pre-funded warrants exercisable for 8.07 million shares at 1/10 cent per share. Mullen Automotive also had to issue Aquitas Capital with warrants exercisable for 50.99 million shares of common stock at 72 and 55 cents per share. This means that Mullen Automotive diluted its existing shareholders by issuing more shares at a low price. Moreover, Mullen Automotive announced a resale of up to 242.12 million shares of common stock by its selling stockholders on June 5th. This includes the shares issued to Aquitas Capital and other investors participating in previous financing rounds. This resale means that millions of shares of Mullen stock will likely hit the market soon, which can further depress the stock price and dilute the shareholders. Another factor influencing the stock price was the earnings report Mullen Automotive released on May 17th. The company reported a net loss of $28 million for the first quarter of 2023, compared to a net loss of $9 million for the same period last year. The company attributed the increased loss to higher operating expenses related to its vehicle development and production activities. Mullen plans to launch its consumer SUV, the MX-05, in 2024 and has a range of commercial vehicles for various sectors. It announced a partnership with Armored Fleet Solutions to provide service and warranty work for its commercial vehicles across the U.S. The company also showcased its commercial vehicles at the Government Fleet Expo and Conference and received $279 million in purchase orders from Randy Marion Automotive, a vehicle dealer in North Carolina. The company also launched its online reservation system for its MX-05 SUV with a refundable deposit of $100. The MX-05 SUV is expected to have a range of 325 miles, a top speed of 155 miles per hour, and a starting price of $55,000. This news and updates indicate that Mullen Automotive is progressing in its EV development and production plans and has a strong demand for its commercial vehicles. However, Mullen Automotive also faces challenges and risks as an investment opportunity, such as a high cash burn rate, dilution risk, competition from other EV players, and regulatory uncertainties. The company has some strengths, such as innovative EV technology, strong order backlog, and potential growth in the commercial vehicle market, but also some weaknesses that investors should be aware of. As you can see, Palantir stock has been trading upward in the past few days. The stock is up by about 130% year-to-date and has been boosted by several factors. One main factor influencing the stock price was the news that Palantir Technologies landed a $463 million multi-year contract with U.S. Special Operations Command, or USACOM, on June 5th. This contract will see Palantir providing USACOM with technology solutions that support enterprise capabilities, such as software capabilities to break down petabytes of data to enable informed decision-making. This contract is a testament to Palantir's unique data analytics platform and its loyal customer base in the defense and intelligence sector. Palantir generated 45% of its revenue from its government clients in the first quarter of 2023, and it aims to become the default operating system for data across the U.S. government. Another factor influencing the stock price was the earnings report Palantir Technologies released on May 11th. The company reported a revenue of $341 million for the first quarter of 2023, up by 49% year-over-year and beating analysts' expectations of $332 million. The company also reported adjusted earnings per share of 4 cents, matching analysts' expectations. The company attributed its robust revenue growth to the increased demand for software solutions across various industries and sectors, such as healthcare, energy, finance, and more. The company also reported a growth in its average revenue per customer from $7.9 million in 2020 to $8.1 million in the first quarter of 2023. Palantir announced some positive news and updates in June 2023, such as developing large language models to enhance their AI capabilities. The company believes that these models will help warfighters and commanders by giving them up-to-date information in the field. The company also plans to make these models available to its commercial customers. However, the company faces challenges and risks as an investment opportunity, such as losing its largest client, the U.S. government, to develop alternatives internally. According to a report by The Motley Fool, some government agencies, such as Immigration and Customs Enforcement, have been developing their data mining platforms to replace Palantir's software. This could threaten Palantir's revenue and market share in the long run. Now that we have analyzed both Mullen Automotive and Palantir Technologies stocks, let's discuss how to hedge our bets and diversify our portfolio. But before we continue, we want to thank you for watching this far. Hedging is a strategy that involves buying or selling an asset or a derivative to reduce the risk of another asset or a portfolio. Hedging can help investors protect themselves from adverse price movements, volatility, and uncertainty. For example, suppose you are generally bullish on Mullen Automotive or EV stocks, but are worried about potential downside scenarios, such as regulatory hurdles, competition, dilution, etc. In that case, you can hedge your position by buying another asset or a derivative likely to move in the opposite direction of Mullen stock or EV stocks. One possible hedging strategy for investors bullish on Mullen Automotive or EV stocks is to buy Palantir stock or ARK AI ETF (ARKQ) as a hedge. Palantir stock or ARKQ ETF is likely to benefit from the growing demand for AI solutions across various industries and sectors, and they are not directly correlated with Mullen stock or EV stocks. Here are some data and evidence to support this recommendation. Let's look at the correlation coefficient between Mullen stock and Palantir stock over the past year is 0.12. The correlation coefficient between Mullen stock and ARKQ ETF over the past year is 0.09. These values indicate a weak positive relationship between these pairs of assets, meaning they tend to move in the same direction but not very strongly. A correlation coefficient ranges from -1 to 1, where -1 means a perfect negative relationship, 0 means no, and 1 means a perfect positive relationship. The correlation coefficient between Mullen stock and Palantir stock is 0.12. The correlation coefficient between Mullen stock and ARKQ ETF is 0.09. The historical performance and returns of Palantir stock or ARKQ ETF compared to Mullen stock or EV stocks over different periods are shown in the table below. As you can see, Palantir stock or ARKQ ETF have outperformed Mullen or EV stocks over different periods, especially in the past 3 to 6 months. Based on their recent news and developments, Palantir stock and ARKQ ETF are two investment options with future growth prospects and catalysts. Palantir stock is a software company that provides data analytics and AI solutions for various sectors such as defense, intelligence, healthcare, and finance. The company expects to grow its revenue by more than 30% annually in 2023 and beyond. The company has secured several new contracts and partnerships with customers such as Usacom, IBM, Amazon Web Services, BP, Rio Tinto, etc. The company is also expanding its presence in international markets such as Japan, France, the UK, etc. The company also invests in R&D to improve its AI capabilities and launch new products and features such as large language models, foundry for builders, etc. ARKQ ETF is an exchange-traded fund that invests in companies focused on innovation and disruption in robotics, automation, AI, energy storage, etc. The ETF has exposure to leading companies in these fields such as Tesla, Baidu, Alphabet, Nvidia, Shopify, etc. The ETF has a low expense ratio of 0.75% and a high dividend yield of 1.32%. The ETF has a strong track record of performance and returns, beating the S&P 500 index over the past 1, 3, and 5 years. To sum up, Mullen Automotive and Palantir Technologies are two exciting stocks with solid growth potential in their respective markets. However, they also have some challenges and risks that investors should know. Let's learn more about hedging strategy involving buying Mullen Automotive and Palantir Technologies stocks or ETFs to reduce the risk exposure and diversify the portfolio. By doing so, investors can benefit from the upside potential of both stocks or ETFs while protecting themselves from the downside scenarios. Of course, this is just my opinion and not financial advice. You should always research and do due diligence before investing in stocks or ETFs. Alright guys, that's it. I hope you enjoyed it and learned something new. Please hit the like button and consider subscribing to our channel. It helps motivate me to make more videos. Also, don't forget to turn on the notification bell so you don't miss any of my uploads. We have an excellent compilation of Mullen Automotive videos. Click our playlist right here and enjoy.